we have a pretty nice range here to fill. So I'll be looking at that area here. It's showing me these nice clean push to the downside to give me a nice clean push, at least to this area right over here. And if you notice, that's about 35 pips away. My stops will go to break even for sure at that point, right? Stop loss will be below two 30-minute candles, right? So if I execute it here, stop loss will be right here for about 20 pips, going for about 35 pips, which is about a 1, 2 something R.
Well, folks, here we are on Trading Up. We've got Arturo, Dr. Dollar in the house. He's about to break down his trading strategy, something he's actually automated it in the end. You're going to find out how he used to manually trade it and see a bit of proof on MyFX book. I think he's done like 43% over 6 months. We're going to jump in and see that. So welcome back to the show, Arturo.
Thank you. Thank you. Thank you for having me, man.
Folks, if you're looking for a prop firm at the moment and you want someone who's been around for ages, flexible, reliable, and has low profit targets, then check out my sponsors, Blue Guardian. So these guys, I've been trading with them for the last 8 months. They've been sponsoring the show for about that amount of time, and they even have guys on my live stream trading them as well. So what I've found is their commission seems to be lower than some of the competitors out there. So really great trading environment, and they offer now CTrader and some other fantastic trading platforms as well. If you want to check them out, there's a coupon code in the description, or just use it, Trading Nut, all one word, and get 10% off at checkout. There's a QR code you can grab here as well. All right, folks, let's get on with the show.
So this is the MyFX book of pretty much how I've automated this strategy. Now, this is just a complete automation of it. But I'm going to show you guys pretty much what I learned in order to create a robot just like this. Like, it's going to be it's going to be super simple to understand, but definitely a little bit harder to execute, right? Because my strategies, I like to keep everything simple. I like to use things that I've seen on the markets and just really chart up clean zones. I think that the main thing that we're going to learn today is just clean zones. You need to know perfect support and resistance in order to execute this strategy perfectly. So let's get right into it. So pretty much what I like to do is always start on the daily time frame, right? And find my levels on the daily. I only like to draw 2 levels on the daily time frame, right? I like to just draw the immediate range that I'm in, right? So if I see that this is a level of resistance that used to be support, right? Resistance, 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 support, right? So this is definitely my range that we're sitting in, right? So I want to make sure that this level here is marked up, right? And I can make it a little bit bigger just to get that wick in, right? I want to make sure that that wick is there because clearly price pushed up here, buyers were sitting here, price taps into this level, buyers are sitting there, so it pushes up. So that's definitely a level of interest, right? Now, whenever people talk about support and resistance, I don't look at it as support and resistance. I just look at it as levels of interest. These are the levels where I'm looking to either execute at or get out at, right? So if it's on the daily time frame, I'm looking to get out at that level, right? Because I'm targeting that zone. And then we have previous rejections, meaning I need to probably either take profits, move my stops to break even, because there could be a level of reaction at that level, right? So if you see on the daily time frame, we can clearly see what's our next range. Our next range is right here. We can clearly see tons of levels of reactions right over here, right over here. I know a lot of people might want to draw it up here, but I don't see it there. Right here is where we're getting most reactions in the market, right? So I'm going to go ahead and draw out that level there. And I don't need to draw any other levels. The reason for that is because if I want to draw out, I want to get this reaction there too, though. So this will be the level. Now, at this area here, I would be a little bit skeptical of the market because we've had previous fake outs, right, on the daily time frame. So I would want to get out right here instead of getting out up here, right? Because we have levels of rejections at that area. So I do not want to be so whenever I close a position would I sell at that level, right? So if price pushes up to this level, I would most likely look for sells at this area here. Why? Because we have past data telling me that price can easily drop at that zone, right? So now if you notice price is kind of consolidating over here. So we do need to take that in mind. And then we start to go down to the lower time frames, right? On the lower time frames, I do the same thing that we just did, right? We're looking for our levels of reaction. Now, this is going to be a little bit more immediate, right? Because I'm more of a scalper. So I don't need to really pay attention to like the weekly, monthlies. I don't care about all that. You know what I mean? Like, yes, I want to grab my bias. I've already grabbed my bias on the daily time frame, which is leaning more towards what? I mean, anybody can kind of see where we're kind of coming towards, right? We're kind of bullish over here, but we're starting to create this downtrend over here. So that's something to keep in mind. So, because yes, these are all lower high structures, right? This is our higher high, lower high. We could have a lower high here. As you can see, we're breaking that level of support. So that would be my level of interest, right? So I'm going to go down. I'm going to zoom in here, and I'm going to start marking up these zones. So this will be my level right there. And then if I if I start to second guess my levels, all I do is look left, right? I'm looking left, reaction here, reaction here, reaction here. Okay, my level's confirmed, right? Whenever you doubt a level, just look left. The answers are on the chart, right? So now I would like to draw my resistance, which will be this area right here. So if I do want to take a bounce, it would be right now, right? This bounce strategy, which is right over here. We're getting a lot of wick rejections to the downside here. And then we have a small little resistance here, right? So now I know on the 2 hour time frame it looks a little choppy, but if we go down to the 30-minute time frame, you're going to see that range, right? That range is what I'm really paying attention to because this is something I would call a no trade range, right? So I would have a box labeling this area. So this is something that definitely helped me out with my strategy is labeling these zones, right? Because if I don't label these zones, I'm going to do whatever the hell I want, right? But if I see that it says no trade, I'm not gonna trade. Or if I do take a trade in the no trade range, I know what I did wrong, right? So and now we'd like to really just make these zones precise, right? I like to, as I go lower, I'm making them a little bit more precise, making sure that they're correct. And then now you clearly see we have this area here, and this area here. So what I'm looking at here is this is our high, right? This is break of structure, breaking this little structure right over here. Now we're looking for sells in this scenario, right? We have our low, we have our lower high, we have our low, we have our lower high. Now we're pushing down. Here we start to consolidate, right? So this is something I like to call side channel or down channel, side channel, up channel, right? So usually when the market likes to push down, it likes to consolidate, right? And in this consolidation, two things will happen. Price will either continue pushing down, which this is just a correction phase, or we find the level of support, which we've supported before, right? That level of support, if it's strong enough, like it is, as you can see, lots of rejections at that area, that's telling me that that's a valid level, right? So now we're looking like that down channel, side channel, to potentially get that next up channel, right? And if you notice in this market structure, it's really a big range, right? We have our level of support, we have our push, we come back down to our level of support, and now we should be looking for potential buy positions, right? So now the last thing that I'll look at is waiting for a potential move to the upside. So right now we got the confirmation. This is our confirmation. Because remember, these candles here, yeah, we pushed and broke those areas there, but what didn't we do? Right? We never had a candle closure at that zone. So without that closure, the level is not confirmed, right? We need a candle closure at the level because now that's pretty much that candle claiming that area, claiming that level. So now this would be my entry candle right now. Boom, to push up. But it's freaking 314 right now. So we're like in the middle of Asian session. So I will not be touching this trade. But there's a couple other things that I do as well. So since we are coming down over here, right? We have our no trade range, and we also, if we look at it, we have a pretty nice range here to fill, right? So I'll be looking at that area here. It's showing me these nice clean push to the downside to give me a nice clean push, at least to this area right over here. And if you notice, price is that's about 35 pips away. My stops will go to break even for sure at that point, right? Stop loss will be below two 30-minute candles, right? So if I execute it here, stop loss will be right here for about 20 pips, going for about 35 pips, which is about a 1 to something or the R, right? So if I want to take this trade though, I would have to definitely wait for price to be in session, right? But then this would be safe buy zones, right? This will be our safe buy zone, right? So now I know that this is a safe trade to take. I know that anything that has to do with sells is a little bit more risky, right? Because if you notice, price is currently maybe not in this time frame, but overall we're bullish, right? So if overall we're bullish, I kind of want to make sure that my time frames that I'm looking at don't really get involved with the higher time frames, right? Because we're scalping, bro. We can catch a 20, 30 pip move right over here and catch a banger trade. But if I want to take sells, I really need to start breaking market structure, right? So market structure would be right here, right? At least for me, right? A lot of people have different perspective on the markets. I'm kind of just showing you guys what I do, right? And what I've done for the past 3 years on my live stream. So if you notice price comes down here, I don't want to be in these sells, right? So I would label that risky sells. I would wait for us to come down and tap and break our market structure and wait for a potential move that looks like this, for something that maybe looks like this, comes up, rejects, now starts to break this area and claim this area. Then I'll be waiting for a rejection of this level to then sell below the break, right? And then looking to target these zones over here or potentially down over here. But that'll be a massive move. So if you want to, and also if you want to label this zone over here, honestly, these wicks over here are very sketchy. But these were done by news, right? So this push happened here was news, if I'm not mistaken, right? Or market open. Was it news or market open? Market open. Okay, so now I know that this area here is our, oh, sorry, my bad, bro. Right here. This is our target zone right over here. Because if I'm selling, I want to target resistances. If I'm buying, I want to target supports, right? Because that's the next level of interest, right? So if I'm buying over here, I'm targeting our level of support, which is right here. Because here we can get a reaction, right? If I'm selling, I'm targeting previous levels of resistance, right? These areas over here. And then I'm using the SMAs, of course, in my favor, right? So the only times I'm using SMAs is to tell if the market is bullish or bearish, right? So yes, it's a lagging indicator, but it can still give you clues or an extra confluence to give you the confidence to take the trade, right? The SMAs are really the last thing that I'm looking for, but if they're in my favor, it gives me a little bit more confidence to take the trade, right? So it's stacking up confluences. I think that with trading, you need at least 4 to 5 confluences to execute a position, right? That can either be price action, market structure, SMAs, Fibonacci, really so many things, right? But you kind of have to find your edge, right? My edge is really price action. So right now, clearly closing above, so we should definitely fill in this range over here. But now, if price wants to come down, there's a reason why it's coming down. So I always give myself 2 options to each side of the market. I never like to tell the market and give it only one bias. I like to have 2 biases. So clearly, if these get faked out and we start to break the support, I'm leaning more towards sells, right? Because we're starting to enter a selling range, right? Because we pushed up. So this is a nice range to potentially push down at this area here. Because remember, the market likes to mimic what it does to the left, right? So pretty much everything that I do is coming from the left side of the market, right? And then just seeing how it's playing out on the right side. But these SMAs are pretty much bearish still, right? So I wouldn't be surprised if this doesn't push up. And the only way you're going to know if it's bearish or bullish, so pretty much this SMA needs to be above this one to be bullish, right? So blue over red is what I say, right? So blue over red is bullish, red over blue is bearish, right? In this scenario. So I would wait for these SMAs to kind of catch up, right? And what usually happens when these SMAs like to catch up, they will cross over. And if price is up here, it would like to come down and tap into this area and then give me a nice setup right over here with the resistance, support, and then looking to take a breakout trade from that zone, targeting this area, and then targeting our next zone. But that's pretty much all. That's how I break down the markets in a nutshell, bro.
Hey folks, what a view behind me. I'm at BLACKBULL Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at BLACKBULL Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at BLACKBULL Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Awesome. That's fantastic. I love
now.
that. I love that risky sales, risky buys and safe sales. That's awesome. So if anyone's going to pick anything up, take that away. I don't know how on earth you built that into a robot, but well done on doing that. So before we wrap up, what's the best way for traders to get hold of you?
Dr. Dollar on Instagram, bro. Just
Awesome.
DM me. I answer all my DMs.
Cool. Well, what we'll do, folks, is we'll hook that up in his show notes link below the video here. Whilst you're clicking on around down there, make sure you do check out his podcast in that show notes page and also hit subscribe, like, and that notifications bell. And we'll see you in the next video.